There's been about half a dozen massive milestones in the past 24 months. The first one was the approval of spot Bitcoin ETFs in January of 24. And that sparked the explosion and the explosive success of IBIT, which went from $0 to $100 billion in less than 2 years, and it's the most successful ETF in the history of Wall Street. So that was a big deal, the endorsement of the SEC.
Michael Saylor just broke down why right now might be the most important moment in Bitcoin's history, and this isn't hype. What's unfolding could send Bitcoin toward that jaw-dropping $1 million mark faster than anyone expects. Think back to January 2024, the moment the Bitcoin ETF was approved. That wasn't just a headline, it was the starting gun. Institutions poured in, and the tide began to turn. Now, fast forward, the Trump administration is giving Bitcoin a constitutional framework, and the Genius Bill just opened the doors for U.S. banks to custody Bitcoin. You know what that means. When America moves, the world follows. From Europe to Asia, banks are watching and adopting. The domino effect is real, and the acceptance of Bitcoin is becoming unstoppable. Stay with me till the end, because Saylor's year-end prediction and his 2030 outlook will leave you speechless. But before we dive deeper, do me a quick favor. Like this video, share it with someone who needs to hear this, drop your thoughts on Bitcoin's year-end price, and don't forget to subscribe for more Bitcoin and crypto updates. Now, let's get into Michael Saylor's insights.
The second big deal was the red sweep in November when you had a pro-crypto, pro-Bitcoin administration. We went from one supporter in the cabinet, Gary Gensler was a Bitcoin believer, 1 out of 12, to all 12 cabinet members, the president, the vice president, the head of the SEC, the head of the CFTC, the head of the Treasury, the head of Commerce, the head of, RFK, the head of, the Housing Authority, Bill Pulte, Kelly Loeffler, and Howard Lutnick. So you all of a sudden have 12 positive cabinet members from one, and that was a big deal. The third big milestone was FASB's adoption of fair value accounting for crypto assets. Before that point, and that took place at the beginning of this year, beginning of 2025. Before that point, if you're a public company, you could mark down your losses on Bitcoin, but you could never realize the gains. Right? It's literally an asset where you could only lose, you could never win. Right? So the entire accounting rule was a deck stacked against you. And so fair value accounting meant that our equity, for example, went from $3 billion to 50 plus billion in 12 months. Right? But if it wasn't not for fair value accounting, we would still have $3 billion instead of 50 billion. So that was very prejudicial and hostile accounting, and that flipped in January. I think the fourth big milestone is all of the pro-crypto and pro-Bitcoin guidance that came out of Treasury, the OCC, the FDIC, and the Federal Reserve. And the key point there is most banks in the United States and the rest of the world were afraid to custody Bitcoin. They were afraid to lend against it. They were afraid to do business with it under the previous administration. And I think the guidance that came out of the current administration delivered a message, which is not only is it safe for you to custody and extend credit against these assets, it's really imperative because the United States wants to be the crypto capital of the world, and we want to lead in digital assets, and that means our banks need to lead in digital assets. So that you can attribute to the President and to the Secretary of the Treasury, Bessent. I think the next thing was the passage of the Genius Act, championing by Senator Hagerty, and that created a stablecoin environment in the United States. And the idea there is, why can't we tokenize the US dollar and ship $1 trillion of it to the rest of the world, or maybe $10 trillion of it to the rest of the world? Because money wants to move at the speed of light, and this is the critical part of the crypto ecosystem. So the last two banks that moved crypto dollars around were Silvergate and Signature Bank, and they were assassinated by the previous administration. They were shut down on a weekend for no good reason. They were perfectly well capitalized, and they were literally murdered by regulators. So you can imagine that the banks were afraid to get involved with crypto under the previous administration. You know, getting a supportive White House, a supportive cabinet, a supportive head of the Treasury, and then a law that says that it is legal for you to do this, I think was pretty important. Then that has resulted in an avalanche of institutional adoption, and now you have companies like JP Morgan, right, and Bank of America and Wells Fargo and BNY Mellon and PNC Bank and Citi that are all announcing their support for this asset class. And if the trillion-dollar banks are willing to custody and they're willing to extend credit and they're willing to handle the asset class and they're willing to bank the crypto industry, that's really the necessary condition to 10x from here. Like Bitcoin got to 100,000 without their help, but getting to 1 million requires the banks to bank the asset. And so the next 4-year period is really about banking Bitcoin and the support for digital assets in general by the major establishment of bankers in the United States. And everybody else in the world, right? You can imagine the bankers in Australia, Canada, Singapore, the Middle East, and Europe, Mexico, they all follow the U.S. banking standard. And so what you have is an avalanche or a sea change here, and the headwinds have become tailwinds.
Okay, so that's what got us here. Let's just talk about the short term, 2025 year end. Where does it end up? Because I've heard everything from 100 to 200,000.
Yeah, well, the consensus of all the equity analysts, and there's like a dozen of them that cover our stock, is north of 150,000. Our corporate guidance is targeted at $150,000 by the end of the year.
Right. Okay, and sort of looking further out, have you got a sort of a 2030 target?
I don't have a specific target, but in the 4 to 8 year time frame, I think Bitcoin goes to $1 million a coin. My 21 year expectation is Bitcoin appreciates about 29% a year for 21 years, and that leaves it at $21 million. Yes. 21 years from now. So I think that Bitcoin will appreciate in the range of 29 to 30% a year for 20 years from this point.
Okay, you seem to like that number, 21. Just as far as what we have to work with through the end of the year now, I mean, you know, is there a favorable macro environment to support that as well?
I think the drivers right now will be Fed decisions with regarding monetary policy. Clearly, that drives every asset class, and we've had a fairly tight monetary policy right now, and if that policy loosens, that'll be a driver. I think other than that, the industry is volatile, and the primary actors in this case are the banks. And every time a bank makes a major announcement about Bitcoin acceptance or crypto adoption, those are all very positive for the asset class, and those should come progressively.
You know, it's interesting, just as far as the more recent price action that we've seen off the back of October the 10th. I mean, we did certainly see a risk on for equities, but it feels like Bitcoin's kind of been stuck and sort of lost the momentum. Why is that?
I think it's a $2.5 trillion asset class that's been unbanked. So imagine that you started a company, NVIDIA, and you gave 90% of the stock to the employees, and they went from $1 to being worth $3 trillion, but no bank would give them a loan against it. So you're an employee, you've got trillions of dollars of capital gains, but no one will give you a nickel loan against you. You cannot get a loan. You could post, you know, you have $10 billion of Bitcoin, you can't get a $1,000 loan from a major bank right now. So what happens is the OG crypto holders, the ones that actually had the capital gain, the only path they have the liquidity is to either rehypothecate the Bitcoin and it gets shorted in the market, or to sell the Bitcoin. So I think we're working through a period where 10% of the supply, or it wouldn't. What percentage of the equity in your big tech company would be sold by employees? You know, when they all got insanely rich, probably 10-20%, right? They would sell at least. So we're waiting for that to boil off. And we're at the point where everybody knows that Bitcoin is digital gold and it's got institutional acceptance. But banks are very careful, bureaucratic, and process-driven creatures, and they should be, right? I mean, you know, if banks get out of control, right, there's hell to pay. So I think it'll take 4 years for the conventional, traditional banking establishment to get spun up, where they're custodying the asset and they're extending credit against the asset. And it's worked its way into systems, right? I mean, Bill Pulte has directed Fannie Mae and Freddie Mac to start to recognize this as good collateral, but how long will it be before you can post your Bitcoin as part of your conforming loan collateral? And it's a government, quasi-government type agency, and the credit rating agencies, they're starting to cover us, like we just got covered by S&P. But how long before they acknowledge Bitcoin as collateral or capital that's just as good as holding a share of Nvidia stock or Apple stock? And I think, reasonably speaking, that's a 2 to 4 year adoption curve. So between 25 and 28, the traditional finance infrastructure to bank and collateralize and issue credit against this will come online. When that happens, if you think about every asset class, if you can't get a loan to buy a car, and if you can't get a loan to buy a house, what happens to car prices and house prices? Right? At the point that the credit market forms over the asset class, the prices move up. So what you see right now are the bank credit markets, the corporate credit markets, right, and the public credit markets are forming on top of Bitcoin. And as they form, that's going to be very positive for the asset itself.